Good morning, everyone. It's Marv Eisen, and today is Thursday, September 19th, one day after Chairman Powell announced that the Federal Reserve was going to lower interest rates a quarter of a point. This was highly expected, highly anticipated, and it moved the market. I'm going to get to that in a minute, but today I put in a trade to the downside. At the open, the bulls drove the market up 4 points. This is the S&P E-mini, ESZ. Remember, we were in the fourth quarter. ESZ is the symbol. And the bulls drove the market up at the open. And now the market's not so sure. I came into the downside because I really don't think that there's reason for such exuberance. I think the market is going to basically float today, but really what I think is meaningless, what these guys think, these guys on the screen, that's what's important. But I'm comfortable in this position. I'm going to digress from here. I want to go back to the action yesterday at 2 o'clock when the Federal Reserve announcement of the interest rate cut hit the news. I'm going to go back to, this is a 3-minute chart, so I'm going to switch to a 15-minute chart. Now here we are at 2 p.m. yesterday, September 9th to September 18th. And as you can see, the market at the time of the announcement shot up, shot back down, stabilized, and then zoomed up. Now, what happened here? I want to call this to your attention because this is very typical of what happens on days of the FOMC announcement. At the time of the announcement, the trade spiked up because, of course, an interest rate cut is generally thought of as being positive for the market. And so traders drove the market up, the early traders. And really, these are people who were going by their gut feeling that the interest rate cut was going to be positive for the market. But if you saw my video yesterday, prior to this announcement, I said that much of what this interest rate cut was going to do to the market was probably already built into the price. And I think that prognostication was pretty much spot on because here's what happened. The guys jumped in immediately upon seeing the market, the interest rate cut announced. But then the smarter money, the people who held their powder, kept their powder dry, took over. See, the market rose to a high of pretty much the high of the day, the limit of 3,005. And then look what happened. We went down 1, 2, 3, 4, 5, 6, 7, 8. It's 2 points between each bar. We went down 16 points in this 15-minute period. 16 points. And then in the next 15-minute period, the market basically vacillated. And if you held on, you made money if you were here. And the cooler heads waited. They kept their powder dry. And look what happened. They watched the action. They saw that the retreat was running out of steam. And then slowly the market began to climb. Now, over here, this candle at 245, this is pretty much a spinning top, would give most traders pause to not be here because it could go either way. But still in all, the market was inching up. And at 3 o'clock, the market headed steadily upwards, past the point where it was at 3,005 and up to 3,009, almost 3,010. And so the lesson to be learned here is keep your powder dry. If you wanted to hop on and you were right here at the time of the announcement, you would have been pretty much, I'd say you were right, but you were wrong because you probably would have held on here. The market went up only 4 points and then dropped like a stone. And the more patient, cooler heads waited to see, watch what would happen, waited to see when the smoke cleared, and watched for reversal. A reversal, that's the key. It's much easier, reversals are much easier to find, to see, than tops. Tops are usually met with a distribution. The lesson to be learned here is one of patience. Patience is something that I teach and I talk about extensively in my course, Trading Mastery for Financial Freedom. And I hope you enroll in the course. It's not expensive, Very worthwhile, very valuable, and I'll teach you how to trade profitably and consistently. So let me go back to my trade here. Where was I? Okay. I'm up 150, the stochastics, and this is a 15-minute candle. Stochastics is overbought. It's pretty much tending to the overbought level. I'm going to stay in this trade because here we see the top of this candle, and we're about halfway into this 15-minute candle. The top has not come up to the top of the opening candle, the opening 15-minute candle. And now it's 9:52. We're almost half an hour into the trading day, and I'm going to stay in this position. I'll come back and show you what this resulted in. This is Cousin Marv Eisen from TimelessDollar, and I'll come back to you shortly. Okay, everyone. Well, it's 3:15, and I sold off my position, and here's what I did for the day. That was $700. So that was my day today. At any rate, I just wanted to get back to you with the results of today's trading. Anyway, thanks for watching. I hope to see you in my course, Trading Mastery for Financial Freedom. Can't go wrong if you learn how to trade. If you don't take my course, take someone's course. If you've been struggling to try to trade S&P E-mini futures, look, I can show you how to do it or learn from someone, but don't go in to trade S&Ps without adequate education and a lot of practice. This is Cousin Marv Eisen for TimelessDollar. I'll see you in my next video.